Ladies and gentlemen, boys and girls, children of all ages, actually, hopefully children 18 plus, you are tuned in to the Loan Officer Podcast, and I have one of my favorite people in the entire world with me today. He is a insurance extraordinaire. His name is Taylor Young of Erb Young Insurance. Taylor, welcome to the show.
Thanks, Dustin. Thanks for having me, man.
Thank you. Thanks for making the time. You and I tried to do this about 2 months ago, and then COVID happened.
Yeah.
And so it's nice that we're starting to make our way back into quote unquote normal life, and we're able to have you into the office studio here. So I want to use the time that we have for this particular episode to really dive deep into insurance. And I'm assuming, and correct me if I'm wrong here, auto and homeowners insurance. Is that the specialty of your firm, or do you all also offer different types of insurance on top of auto and homeowners?
Yeah, a lot of auto and home, but our business is essentially personal and commercial lines. So small business owners, commercial property, that's a big side of our business. Specifically for me and how we've gotten to know each other is a bit more on the personal side. And homeowners insurance is such a driver for us. And so both sides.
Okay. And it's insurance to me is one of those things, like a common theme of this show, and really one of the inspiration of the show. It's like everything you should have learned in high school, but you didn't. Growing up, not only was insurance not really taught in my household, besides, oh, you got your license, now our effing insurance is up and $400 a month, right? When I turned 16. And then throughout high school and even college, no one ever talked to me about, the importance of insurance, what proper coverage is, why I would need it, why I wouldn't need it. And I'm thinking if that was my upbringing, that was probably many other people's upbringing. So let's dedicate the next 20, 25 minutes shedding some light on the basics of insurance. Like, for example, I'm a homeowner. Obviously, I have to have homeowners insurance, especially if I have a mortgage on my property. I guess if I didn't have a mortgage on my property, it would be elective whether or not I had homeowners insurance. We own 2 vehicles in my household, and the state of Florida, I believe, correct me if I'm wrong, they mandate that I have auto insurance for my 2 vehicles. But is insurance something that I get it and forget it, or is it something that I need to review? And if so, how often do I need to review it?
That's a good question. I think the review question comes with life changes. If for the most part, if you make a decision and you have a conversation with your agency and your family, and you sit down and you say, hey, we have 2 young drivers and we just added a car and let's beef up our coverage because, look, we have young drivers driving around and we're trying to protect our financial life and our financial assets. And let's say you beef up your coverage, you buy an umbrella, and next year nothing changes, then I don't know if you need to review that every single year. But specifically, I'm always a fan of the advisor role, being a little bit more proactive before you make a decision. So, for example, having a conversation with your agent before the young driver goes on the policy, before you buy that new vehicle or new 2 vehicles or new motorcycle or whatever it may be. So I think life changes before those life changes happen is a great time to review your stuff. But yeah, I mean, look, there's a lot of stuff growing up that you hear, is a red car more to insure than a yellow car, right? Or, like your parents, hey, just keep it above a 3.0. And you're like, okay, keep it above a 3.0. Why? I don't know, because it's $500 every 6 months if you do that, right? That's kind of what you hear in most households.
Wait, is that true? If I have a teenage driver that is on my auto policy and their GPA is over 3.0, I save money on that auto insurance?
Oh, absolutely. Yeah.
Okay. Jackson, I hope you're listening to this.
Keep it up.
Keep it up. Keep those grades up. It'll save mom and dad money.
Yeah.
You mentioned 2 things that I want to circle back on. One, it's more of just one of my biggest takeaways is I like how you said advisor and phone call, meaning insurance, no matter what type of a technology world we live in, it's still not a DIY. It's not a do-it-yourself. It's a conversation you should have with a professional who can help lead you in the right direction based on your particular needs, wants, and goals in terms of where you are in life. Is that a fair assessment to make?
That's it, right? I mean, that's it. I mean, you can do a lot of stuff online. We all can. I mean, you can shop. You can, we call it being a quoter versus being an advisor. Anybody can quote your business. I mean, it's as simple as matching up the numbers and so on and so forth. And a lot of people will just do the apples to apples thing. They'll just take the coverage that you currently have, even though there really may be no thought in how you arrive to those coverages, both on your home or your car or your business insurance. So I think from an advisor perspective, there's a difference between acknowledging where somebody is, and then ultimately asking some questions that can allow you to discover if some changes need to be made. So yeah, I think like any professional with this new online, not new, but certainly prevalent online shopping
there's
environment.
Definitely a spotlight.
Right. I mean, so people prefer to get their stuff easy, convenient, and that's no problem. But some of these big decisions, like the coverage, like protecting your financial assets, like protecting your business and livelihood, absolutely, I think you should talk to a professional.
Yeah, because anyone can quote you the wrong policy.
Sure.
Anyone can quote you the wrong coverage.
And look, if we're going to talk about homeowners insurance. Anyone can bind a policy. It's just whether that coverage is going to stand up if and when you need it. And that has a lot to do with it.
Oh, it definitely does, probably with all insurances. And then you also mentioned the word umbrella. So I think umbrella, like, hey, did I grab my umbrella because it's supposed to rain today because it's, now summertime and we live in Central Florida.
Right.
But I'm pretty sure the umbrella that you mentioned is not the same umbrella that I think about in the back of my car.
That's
Can you walk us through what you mean by an umbrella policy?
Yeah, so I think of it as almost like a blanket policy, right? So all the different exposures that Dustin Owen has personally, right? He's got his house, he's got his life, he's got his autos and all the different moving parts, if you will. And those all have insurance coverage to liability and protect you, that if something were to happen and you were to be deemed negligent or at fault or somebody was injured, whether it is in the defense of you or paying out for somebody's injuries, those have limits of liability, right? So sometimes $300,000, sometimes $500,000, but they do have limits.
Meaning the policy I currently have on my auto or on my home will only cover me up to a certain dollar amount.
Correct.
After that, I'm on my own.
Correct.
So if there was, let's say, a July 4th party at my house, and let's say I have a pool and I rent the big blow-up bounce house that goes in the back, and my wife's cousin's drunk uncle comes over with like a whole entire stash from south of the border, which, have you ever driven 95?
Oh,
so
yeah.
If you drive 95 from Florida, like let's say up to like New York, well, right there at the border of North Carolina and South Carolina is like I don't know what you call it, like a tourist trap called South of the Border. And as a kid, that's where we went to buy the best fireworks. So when I mentioned south of the border, I'm actually paying homage to the place right off of 95. Yeah, it's not an illegal activity. There's actually a place right off of 95 in between South Carolina and North Carolina. It's called South of the Border, and that's where we used to go as kids to buy the best fireworks. So in my analogy, so it was my wife's cousin's drunk uncle comes over with the fireworks, and people get hurt. Right, sure. Between the pool and between the fireworks and the blow up bounce house. And as a homeowner, someone wants to sue me because it's my fault. It's my house. I allowed those people in. I allowed them to bring their fireworks, et cetera, et cetera. You're telling me that my homeowner's insurance policy is only going to protect me to a certain dollar amount of liability.
Sure. Yeah, there's two levels of coverage on your homeowner's insurance. One, you have medical payments, and that is regardless of there's negligence or there's any fault, right? Just somebody getting hurt at your property, there's a certain small amount, usually $2,000 to $5,000, that's going to be paid out if needed regardless. It's almost like a buffer between any liability.
Okay.
Now, the next level is the liability, what we're talking about with the umbrella, call that $300,000 to $500,000, where, if they deem that, hey, look, Dustin, you had that water that you didn't clean up in the kitchen and now somebody slipped and they fall, whatever it is, something that you knew about that you were, deemed negligent, then your liability is going to protect you or pay out for those injuries. But yes, that is limited to a certain extent. So an umbrella comes in the form of, okay, after that, we're going to pay for a policy that continues to defend or pay out on my behalf so I don't have to do that personally. And it usually comes in the form of $1 million or $2 million or sometimes $5 million and above as far as that umbrella blanket liability policy.
Who, in your opinion, should carry umbrella insurance?
Most people.
Most people.
Yeah, and a lot of people that are young, they go, I don't know, I just don't have any assets yet. I got my primary home, I'm protected, it's homesteaded, whatever here in Florida, and that may be true, but there's plenty of stuff that they can go after if it's a big enough incident, meaning your future wages and so on and so forth. So,
well, and that's like on this show, we talk a lot about financial fitness, and we talk a lot about not having credit card debt, but having 6 months reserves and contributing to your 401k and having money into an IRA. And I would tell someone, again, I'm not an insurance professional, I'm not a financial advisor, but the minute you start making headway of the no credit card debt and the 6 months reserves, and you are a homeowner and you're contributing to a 401k, you need an umbrella policy.
Well, it's defense, right? All the things you talk about are offense. Your retirement account, you're building, you're protecting, you're growing your income. All that stuff's super important and vital, but there's some defense that can be fairly inexpensive that can really protect you if something were to happen. So I'm a fan of it. And then specifically to say owning a home, I mean, if you have a rental property, that's a big one because you're just not protected the same way, as you are as your primary home when, the homestead
Well,
stuff.
especially if you own a rental property and the property is owned in your personal name, which
Right.
most are.
Yep.
Most rental properties are financed in the person's name, not in the name of an LLC, because it's very difficult to get financing in the name of an LLC.
And there's all sorts of challenges with it. It's harder to get insurance too. So, for me, I'm one of those people, unless that's a business of yours where you're going to have multiple properties and you have the ability to keep up with it and so on and so forth. If you have like 1 or 2 rental properties, I mean, my opinion sometimes is just hey, look, you can buy more insurance coverage. If they're in your personal name and something happens, you can buy more insurance coverage. Of course, I'm not an attorney.
Correct.
But at the same time, it can get a little complicated once the LLC.
It's interesting. And again, I'm not an attorney either, but I had an attorney client. This is probably going on 10 years ago. Reached out, 15 actually, reached out and she wanted to buy an investment property and she wanted to buy it in the name of an LLC because she wanted to protect herself financially. Once she saw what it meant to finance in terms of an LLC, she was like, "Ooh, you know what? It's way cheaper for me to max out my insurance coverage than it would be for me
Sure.
to ever finance this property because it wasn't her business. This was a part of her overall portfolio
Right.
for investment or her investment strategy." That would be a really fun rabbit hole to go down, but let's try to, at least me, I'm talking to myself now. Dustin, pull yourself out of that rabbit hole because I do have some more questions as it pertains to just, basic insurance needs. Like I asked the question, I want to circle back to it about shopping or re-reviewing my insurance. And this is like I literally don't know this question and I should at this point in my life. I own a home and I own a investment property. How often should I be checking to make sure that the insurance I have on that home is still what's best? I know you mentioned earlier a good trigger is when a life event happens, but is it as easy as picking up the phone and calling Matt at your office, who Matt is actually my insurance agent for a couple of my policies, and saying every single year, "Hey, Matt, will you shop this again?" Or is that overkill?
I don't think it's overkill because another thing that happens too is that policy language can change. And so, I think it's prudent to review, your policy. Like for me, I received my renewal just a couple weeks ago and look, my rate went up. And so mentally, I kind of look through it and say, am I still in the best option? But at the same time, there's also inflation guards on properties where, they can go up as far as the coverage for your home, 4 to 8% every year. So you just want to make sure that's kind of congruent with what is actually, within your home and the structure and stuff like that. So I think making sure, I think once a year is a great thing. I don't think it has to be, you have to physically go see your agent, book an appointment that's going to take an hour. But I think a note to your agent to say, hey, can you just check things out, make sure there's nothing major. Obviously prices are a part of that, but what you're talking about is really to make sure that, you don't have any gaping holes in your,
Yeah, no, it is definitely twofold. I mean, look, at the end of the day, dollars are dollars. And if I can pick up an extra $100 or $200, that's fantastic. But yes, I also want to make sure I had the proper coverage because that was more speaking of homeowners, but let's flip it to auto. I've owned my car for 7 years now. When I bought it, it had 25,000 miles. Today it has 145,000 miles. Is the auto insurance I have on my car, assuming I've not done anything with it since I bought the car, is it still the best insurance, or should I have more or less coverage? Like, is that something I should be considering?
Sure. Yeah. And I think the majority of what, auto insurance is a big one. I think your biggest exposure is the liability portion of the auto insurance, which to me most times drives the cost, specifically here in Florida, because it seems like every accident is a lawsuit, right? It's
the American way.
We live in a world where you see you're in an accident on I-4 and you can see 4 billboards about guys or gals you can call to get them involved. And I'm not saying that's good, bad, or indifferent.
Yeah.
I'm just saying that's the way it is. So that's where a lot of the cost comes in the auto insurance, is the liability piece. And as your vehicle ages, now certainly there are people that say, hey, look, I don't want to pay for physical damage on this vehicle. It's worth $500. But most of the time, you're not paying a lot as the vehicle ages. As the vehicle goes down in value, you're typically paying less for that portion of the premium, if you will.
Okay.
Yeah.
I think that answers my question. So should I have should I have picked up the phone, called my insurance agent every couple years to make sure that the auto policy that was the best for me 7 years ago is still the auto policy that's best for me 3 years ago or today?
Yes. I think it takes very little time. I think, as you mentioned, from a pricing, a coverage, and just a connecting standpoint, I think it's prudent. I mean, in a perfect world, I won't get into too much of what we do, but in a perfect world, you set up systems and processes as an agency to be able to reach out to your customers if and when there is a change that is more significant than normal, whether that be from a coverage standpoint or a pricing. Now, I will share something in Florida that does happen, that I hate that it happens, but it does, is companies right now in Florida on the homeowners insurance side are struggling from profitability, and they have been for a couple years now. There's many reasons for it that we can go down that rabbit hole.
Sinkholes, floods.
Water damage, assignment of benefits, abuse. When you have contractors that will come out and it should be a $5,000 claim, but it's now all of a sudden $100,000, right? You multiply that by thousands of people. It's an overwhelm of the system, and so this is all fun stuff, man. But yeah, so stuff like that with your homeowners insurance, they can now, like in Central Florida specifically, where we are, you will have companies that will send out your renewal and you will get the paperwork, but they may limit water damage now. And when I say limit water damage, meaning if you have a pipe burst, you used to have coverage for, hey, whatever the damage caused, that's what they're going to pay on it.
And I'm assuming that's not in like 32-point font and highlighted for
right.
me.
They're not going to tell you, hey, Dustin, we limited water damage. Why don't you call your agent like you should? No,
Yeah.
I'm kidding, right?
No, they don't.
They don't tell you that. Like, so even me as an agent, right, I have to actually review that 40, 50-page document, and maybe that's on 1 or 2 pages. But it's not like they're sending me a form I potentially have to acknowledge and sign, right? So there's all these things that I think can happen that makes it prudent to just check,
Awesome. When we were talking about umbrella policy, I didn't get a chance to ask you this, but as a listener and a fan of the show.
Yes.
I'm a fan of my own show.
Hey, you should be, man.
Someone has to be, right? It's me, it's my mom, and I think my sister at this point.
But I'm on there, so that's important.
Then, yeah, TY, perfect. We're up to 5. I still haven't gotten my dad to tune in yet,
Really?
but we're almost there. No, on the umbrella policy, not going to hold you to it because I'm sure, like anything, it's going to vary on each individual that inquires. But like, what does the standard $1 million or $500,000 umbrella policy cost me if I were to want to get one? And does it get added onto my homeowner's insurance? Does it get added onto my auto insurance? Is it a separate bill?
Separate bill, typically. I'd say it starts at $150 a year. So very inexpensive
for
about
how much coverage?
About $1 million.
For about $1
million
million.
And then it scales probably for that same amount of coverage anywhere from $400 to $500 a year. And there's, of course, you can add more coverage. You can buy extra uninsured motorists. There's all different ways you could increase your coverage on it. But it's a few $100.
Okay.
I mean, it's just about having your underlying coverage on the car insurance high enough to qualify. Because ultimately, if you don't have enough underlying coverage, companies aren't going to write the umbrella, right? So that's how it works. And so most of the time, our recommendation, if, for example, in Florida, you have a lot of companies that will write auto insurance, but they don't write home in the state. So sometimes it's not as simple if you're living like in the Midwest and you're all with Liberty Mutual for everything, right? They're like, hey, look, down here in Florida, we're not writing homeowners insurance. So a lot of times I think for people's biggest exposure and the most common where your umbrella would be brought in is auto, because auto accidents, right? Because you can really hurt somebody, and there's a good chance that it's going to be a legal suit. So I think getting an underlying auto policy and the umbrella policy being the same and making sure those jive is super important.
So typically recommended if I'm looking to get an auto policy, if I'm looking to get an umbrella policy, go ahead and try to get it quoted or attached with my auto.
I think that's prudent, and of course, not every umbrella is created equal, right? So there's some intricacies in coverage language that you want to get with your agent on, but I think that's a good start.
How about this? What are some? I'm looking for the right word. I want to use the word scam, but like as a average, ordinary, everyday person, Central Florida resident, American, etc. What are some things that you see in your industry where maybe I or anyone else could be spending money not in an unnecessary fashion in insurance? Meaning I'm being sold insurance that I just probably shouldn't even consider, or I'm being sold insurance that doesn't apply to me.
Yeah, that's a good question. For me personally, I'm licensed for life and health. We don't do a ton of it. But I think on the life insurance side, there are people out there that I think are not finding matching the person to the product and making sure that's a fit. Maybe they're leading with a product and then, hoping, if that makes sense.
Well, here's what's funny. I'm going to have to stop you on this one. You did tell me coming in that you do from time to time tune into the show. Did you happen to listen to an episode that we did about 2 weeks ago where it started off the camera? And then I told Coleman, I'm like, just stop. Let's turn on the mics, hop in the chair. Yeah. Did you listen to that show?
I didn't. Yeah.
Okay. Someone tried to sell him life insurance.
Oh, it went through the whole story.
Yeah. I
got to listen to it.
Oh, yeah. You have to go back and listen to it. And Coleman right now, you guys can't see him, but he is behind the camera today. I'm going to yell out, John, what did we name that episode? Do you remember?
Dio and Coleman Talk Life Insurance.
Yeah, I think it's
right,
legit.
So I'll be able to find it.
Yes, it's Dio and Coleman Talk Life Insurance. But yeah, because John's producing the show and he's co-hosting it some days, and he's like, you know what, I'm going to practice what we've been preaching. And he reached out to a family recommended financial advisor, and all of a sudden he said it turned into a life insurance pitch. And look, I have life insurance. I have term, I have whole, I have universal. But I don't know if life insurance was really needed for John Coleman, who, for the most part, he's married with no kids, and his wife and he run congruent but not together finances.
Sure.
He needs enough life insurance to basically bury his ass. That's it.
Yeah, it's interesting because I'm insured through I always tell my wife I think I'm worth more dead than alive, right? And I've always grown up in a household where my father's a financial advisor, so I've always valued life insurance, always understood the value of life insurance, and I've actually had life insurance since I've been 23 years old, when I had no money. So look, I get it. It's important, but I think probably when I listen to that episode, you do have some life insurance salesmen, if you will, that lead with the product rather than lead with your needs. And I think that it becomes like somebody just goes through their process and they bring you along for their ride rather than meeting where you are and then understanding if a product can even solve your problem. Because I think that you have to start with what's that person's problem or their ambition, and then the product's got to support that. It can't be, let me start with this product that pays me a lot of commission and let me find a way to convince them that product is for them. And there's good and bad in every industry. That's just one thing that irks me in our industry. And we don't even sell a lot of life insurance, but you said it, so now I'm responding with what irks me. But another thing too is deductibles. I mean, unfortunately, when hurricanes come through, and they have, how many major storms has been hit on each side of Florida the last couple of years? But I think people are surprised at that 2% hurricane deductible and how that works. And although that may be the standard, I don't think people take enough time to really acknowledge what 2%
really is.
Right, 2% of my house, what it's insured for, not 2% of what the claim is, right? And that's the misconception. So sometimes people call us and we're like, hey, I have $5,000-$6,000 worth of damage. And you're like, your deductibles are going to end up being 7 or 8. And so that's unfortunate. So I think we could all do a better job in that education, but I don't think people really say, hey, if something were to happen, could I actually afford this deductible? And if I can't, is there an opportunity to pay more to have a lower deductible because maybe my cash reserves aren't what they are going to be, and I need to work towards that?
Yeah, so you're going to make me get on my soapbox again because I'm just a huge proponent of this in general, because you have to pick up the phone and call an advisor to walk you through that. Because if someone was just online getting quotes, like you nailed, hit the nail on the head with, if you don't know what it means in terms of dollars, like what does 2% really mean?
Right, like real money.
Yeah, real money. Let me walk you through that. You're not going to get that if you're just online shopping for the cheapest quote.
You're just going to look at that quote has 2%, so I guess this one should have 2%, right?
Yeah. Yep. Or even just, I know as an employer, when it comes to our medical coverage, we can offer super cheap medical coverage, but it comes with a really high deductible. And do people really know what that means? Like it means we're not paying out until you have paid in X amount of dollars. And how many people, whether that deductible is $5,000 or $10,000, have that type of coin sitting on the sidelines?
Yeah.
Right. A hurricane comes through and rips off your roof, and then rain pours into your house, and all of a sudden you had a 2%. Are there higher ones? Are there 4% hurricane deductibles?
Typically, and you would know this because obviously your industry, but typically, like if you're getting it financed, they're not going to allow anything more than 5%. But most of what you see is no more than 2%.
Okay.
But it really gets dicey, even though you think, oh, high value homes, that person's going to have, more wealth, more money. But the higher value home is a massive deductible at 2%. So you can imagine, as you go up to $500,000 and $1 million in dwelling coverage, if you will, if that person doesn't have as much cash as maybe their house would indicate, well, then there might be a problem there too, even on that side of things.
Well, if you think about it, in most markets, you're not picking up a home for less than two, or you are picking one up between $2 to $250 as a starter home. Your move-up homes are probably closer to $4 to $5.
Sure.
Yeah, so you start throwing a $450,000 house at a 2% hurricane deductible is $9,000.
Right. And here's the thing, right? And this is what we're talking about. That's okay, right? If that's what the market demands and that's your option, or you don't like the lower deductible option because you're going to have to pay $1,000 more a year and you don't want to, that's okay. But I think most people don't make those decisions consciously.
Yeah.
Right? And that's because they don't talk to an advisor or they don't go through it.
Well, yeah, because how much extra per year would it have been for me to do a 1% hurricane deductible? Or do they even make $1,000 hurricane deductibles?
They do, right? But every situation, you may not have a company that qualifies for your particular home that was willing to offer that lower deductible,
okay,
right? So it's not like a guaranteed thing where every company does it and it's always available. But occasionally, like specifically with new construction homes, because so many people want new construction, they're going to have a better chance to find a flat hurricane deductible.
Gotcha.
Versus, and when I say flat, sometimes 500, sometimes 1,000.
Yeah, but when someone's obtaining a homeowner's insurance quote, these are all aspects of that quote that need to be considered from a financing standpoint.
Yes.
Yeah. Look, if you follow the principles that we teach on this show and you have 6 months reserve, then a 2% hurricane deductible you can stomach.
Right.
But what if you could have paid an extra $180 a year for a 1% hurricane deductible? Was that $15 a month worth not having to pay an extra $4,500 in deductible, or was it not worth it?
It matters how long you go without a claim.
Correct. Yeah,
right?
and it's going to be a personal preference, right? And you don't know the right answer until it's over with.
Sure.
I mean, that's most things in life. How about this on auto? In any gotchas in auto, like, and I don't know this, does gap insurance come through my auto policy, or does gap insurance something that a car dealership tries to sell me?
It's funny because I'm not even going to be an expert on that because I lease a car and I get it. I typically get it on both. I'm like, I don't know what the differences are, but no, I mean, usually what the insurance companies will do if it's a brand new vehicle or within 12 months of being manufactured and sold, there's some even offer replacement coverage. You see those commercials where they'll, you're in an accident within 12 months, they'll buy you a year newer model kind of things. So there are a bunch of little mini endorsements like that in auto that are specific to so many companies. I won't pretend to speak in a blanket fashion on what each of those represent. So, but if you do buy a new vehicle or lease a new vehicle, yes, it's way easier to get protection against, the quick depreciation of that, and making sure you protect your lease or your loan gap. So yeah, that stuff is important because people get underwater on their vehicles quickly, and they can, and making sure that, again, if the coverage is available, that you're able to purchase it.
Yeah, I should probably do a better job of explaining what gap insurance is, and you kind of just did it in your answer there. But in a nutshell, gap insurance, correct me if I'm wrong, is when you drive off the lot and your car depreciates in value, you could be what's considered upside down or underwater, meaning you owe more than what the car is worth.
Right.
So if you totaled your car, your insurance claim isn't going to pay out but what the car was worth, and you might owe more money, which would leave some kind of a delta or a spread between what you owe the finance company versus what your insurance company reimbursed you. Gap insurance covers that gap. It makes sure that not only do you get enough money to replace your car in the your car in the condition that it was in and the value is, but you also get enough money to pay off your finance company.
Absolutely. And look, you forget about that when people say, "Oh yeah, I paid you an insurance check. They gave you $10,000 for the car." Okay, but what if you owed 11?
Yeah.
What if you owed 12? Now you have to go get a new car, right? And you're at a deficit. So that's exactly the reason you should.
So again,
that.
if you have 6 months reserve, you may choose to not add gap insurance onto your auto policy. But if you're choosing whether to do it or not, you should look at the financials. What does it cost you to have gap insurance? What does it cost you not to have it? And do the mathematical calculation or mathematical formula, and you make the decision that's right for you. Are there one or two aspects of auto insurance that you see in your day-to-day that make you big sigh or an eye roll, that you just see mistakes, common mistakes that people make with their auto insurance? What are they, so we can make sure that we avoid them?
How long do we have?
Well, we're probably already pushing up on our 25-minute time frame. But
the absolute biggest painful calls that I get, it centers around claims frequency. Parking lot incidents, small incidents, and people feel like, hey, look, I'm paying for this coverage. Like, this is what I buy my auto insurance for. And this is one of those things that you mentioned at the front of the podcast, like things I knew or I wish my parents would have taught me in high school. I'm very fortunate. My dad was a financial advisor. Like, he loves this stuff. Like, so life insurance and cost of overall risk, like that was at the dinner table, baby. So
what was that like? Because my son and my daughter have to live that.
Yes.
Like, how annoying am I?
You know what? I'm so grateful for it. Especially now in my throughout my 20s and in my early 30s. I think I a lot of times take for granted my dad's wisdom that I've been able to leverage just on some basics. So it's a great thing what you're doing with the podcast when you talk about this stuff, because I think for the most part, most people don't have that influence. And I feel grateful for it. So I think the small accidents that you think you should claim but you shouldn't, I think that should be a call to your agent. Parking lot incidents are the
literally
worst.
Pick up the phone and be like, hey, I just rear-ended someone, or someone bumped into me at the Publix parking lot. Yeah, should I claim this?
Yeah, I mean, the reality of the situation, parking lot incidents, there's not going to be somebody at fault. It's probably going to be a shared fault situation regardless. It doesn't matter how upset you are or how wrong you think that other driver was. For the most part, unless they admit liability, there's probably going to be some sort of shared fault, because typically the police won't even come to parking lot incidences or be able to deem fault. Like, it all depends. But at the same time, then, so say that you file a claim, and it's a $700 claim, and your deductible's $250, $500, and you netted $300 and really, got your vehicle fixed. Okay. Well, you don't know when the next incident's going to happen. What if you have a legitimate incident that you can't afford out of pocket, and you're going to have to claim it? It's a couple $1,000s. It makes sense. Okay. Well, all of a sudden now you went from having nothing on your record to two things on your record, and now you're undesirable in the insurance market for the next 3 to 5 years, right? And I'm not saying that's a science, but that is that sort of perpetuation leaves people frustrated.
Yeah, two claims in 6 months.
People are going to be like, yeah, I'm paying too much. And I say, I may agree with you, but we're less desirable to the insurance marketplace. And I wish we wouldn't have made that first claim because we didn't need to.
Okay, so that's a good takeaway. That is hey, look, if you have a minor bump, bruise, before you go and file a claim, pick up the phone, call your insurance agent, pick their brain. They're experts at this, and they at least know more than you do. All right, what else?
Oh man, that's most common.
Okay.
Right, because I think most people go, "Hey, I'm trying to keep my rates down. I'm trying to keep it reasonable. I'm trying to, and you're like, okay, driving record is most common.
Okay.
I think
anything
new
in
vehicles,
coverages.
Yeah. So a lot of times people will call us and say, "Hey, I'm thinking about getting, I have X vehicle. I'm thinking about getting Y vehicle." And sometimes they'll send us like 3 or 4 vehicles they're shopping, and me, I'm like, hey, let me know when you narrow it to 2, because the insurance is not going to differ that greatly that it should make your vehicle decision. But for the most part, the higher cost to replace that vehicle is going to be the higher cost to insure it. A lot of companies charge premium by the overall weight, meaning, the heavier vehicle, potentially, you may have some algorithms that are built in that there's higher costs because if that vehicle's in an accident, it's going to cause a bigger deal, right?
Wow. Okay.
But I think the biggest misconception on auto insurance is that they use so many, we live in a techie world where algorithms and they determine the rate, right? So they use your credit, they use your zip code. It's like 50, 100 tiers some of these companies have.
Yeah, no, they pick the smartest brains out of schools like MIT and Penn, who are actuaries, and they get out like a 2,700-page Excel spreadsheet, and they build a formula.
And they don't love you or they don't hate you. They actually don't care about you.
Correct.
They care about the math.
Correct.
Right? And so that's where these rates come from. So I think people take it a bit too personal, where it's like, look, let me just understand the game. Okay, so you're telling me they're going to use my credit. Let me just improve my credit. You're telling me that, this vehicle may cost more. Okay, like let me do all the things that I can to make me the most desirable in the marketplace. And that's going to allow me to get the most value from the marketplace. So I think credit's a big one that people get frustrated at or don't understand completely, is that why an insurance company would link their credit to their auto insurance rates. Like, hey, look, that has nothing to do with me driving. And that very well may be true. But again, they don't care about you. They care about the data.
Yeah,
right?
the data suggests that people with better credit tend to have less claims than people with lower credit.
Yep. Claims frequency, again, they don't necessarily care as much about the larger stuff because that stuff's going to happen regardless. They care about claims frequency because that's the stuff of, hey, I got this $500 claim and now it's the cost to go through the process too. So that's a big one.
So, okay, I have 2 final questions. We could probably sit here all day. I would sit here and pepper you with questions on insurance.
Am I being too cynical, by the way? About I mean,
no, not
your
one
listeners.
bit.
I care about your listeners. It's just maybe the auto insurance's data. Doesn't.
I think the best part about this show and the voice that we carry is that we tell it like it is.
Sure.
I mean, we don't try to hide from anything. We don't beat around the bush. I try to watch my language, but I'm not going to not be me.
Right.
But no, so the questions on insurance would be, on my auto insurance, is there some commonality that you see? And I'm really thinking in terms of people being undercovered.
Sure.
Like, and maybe I'm just off base here, but my guess would be people call you, you look at the policy they currently have, and you notice that they're undercovered, and they're probably undercovered because, well, they went cheap. They didn't go with what was right. Is that something that's commonplace in your day-to-day, or most people have sufficient coverage when they come to you?
No, most people don't have enough coverage. And look, enough is it's
subjective,
relevant to you,
yeah.
But at the same time, I would say most people, specifically when you're in the direct-to-consumer marketplace, whether that's Progressive Direct or Geico or whatever it may be, I have nothing against those companies. There is a great spot clearly by the market share that they have, that there is a need for that. But at the same time, like uninsured motorists is a perfect example, right? That's an important piece of coverage on your auto insurance policy, but it's not mandated by the state of Florida, right? Like you quote unquote don't have to have it.
But you would recommend everyone carry?
Absolutely.
Okay.
Right. So to me, I'm like, I'm not going to write in an auto insurance policy without it because that's just a nightmare if you're in that accident. I think Florida leads the country as far as how many uninsured drivers are driving around on the road. So just that kind of exposure just is not a good thing. But when you call those places, they may be helping you in Florida, but they may also be helping you in Minnesota. Like they're looking at the manual and say, oh, well, Florida doesn't require you to have that. So that is technically correct. But
that is awesome. That's what I was looking for. Like what are some common mistakes that you see people making when they're choosing their insurance? So uninsured motorists.
It's a huge one.
Any other one that sticks out the way that uninsured motorist sticks out to you?
Nothing sticks out like uninsured motorist because it's that important. It's very sad if somebody doesn't have that or have enough coverage because that's the coverage for them.
Yeah.
That has nothing to do with them hitting somebody and being at fault. That's the coverage when they're in an accident and somebody that hit them is either it's a hit and run or they don't have enough coverage or they don't have coverage. So, man, I get super passionate about that. And a lot of people talk about, well, I have health insurance. Well, health insurance has its own issues with 80/20, like all that stuff, high deductibles and so there's all sorts of things, but uninsured motorist is a huge one. Another one, I've had some people like rental car coverage. Probably don't buy enough rental car coverage because
hold on. When I rent a car,
so if you're in an accident,
or on my own policy, I need to have some kind of rental car coverage.
Well, we can talk about both, but let's say if you're in an accident, there's what you can buy on your policy is that like if you're in a covered accident and your car's got to go to the shop for 2 weeks, you still got to get to work. You have $30, $40, $50, $60 a day to rent a car.
Oh, okay.
That can get expensive. I mean, if your car can take a couple weeks to get fixed, that can be expensive. So, and a lot of times people don't like what they can rent with, say, like the minimum of $25 a day, right? You're like in a little.
I love driving a Ford Volt. What are you talking about?
Yeah. You're in like this smart car and you're used to driving like a Ford F-150. Like that's not a good thing, maybe. So that stuff is very inexpensive compared to anything, right? So I'm always a big fan of like buy more of that because it's like $2, $3 here, $4. Like it's not a big decision, but if you have to use it, you're going to really feel that.
Okay. But I did have a question regarding my family, we rent cars.
Sure. It's a very common question where you're going with this.
So when I rent a car, I tend to always deny their insurance. My assumption is that my policy that I got from Erb Young, by the way, my policy is going to cover me in case I get into an accident. Am I totally wrong there?
You're not totally wrong. That is true. So typically what will happen is that as you travel or I travel, I'll tell you what I personally do, and I won't even make a recommendation, right? But I'll tell you what I personally do is I look at the cost. Just like when I buy any insurance, I look at what they are going to charge me for theirs, and then I weigh the decision. Am I familiar with the roads? What are the chances to meet? Like, for example, my wife and I went to California back, I think it was 2017. Were you there with that UCF Stanford game?
I was not at UCF Stanford, no.
All right, it was that trip.
Okay.
Whenever that was, and I had never rented a car in California, and I also rented a Camaro, like a red Camaro.
Convertible?
Yes.
Yeah, go up and down the Pacific Coast Highway?
Yes,
okay.
Like the classic, like I'm going to California, I'm going to do it,
yeah.
And anyway, the insurance that they were going to charge me was fairly expensive, but I purchased it because I was in unfamiliar territory, and I just said I'd rather pay than deal with it. Now, typically what will happen is that your policy as it reads will apply to that rental car. And typically what it is the lowest amount of coverage like on your policy. Like, so for example, you have $500 deductibles on your comprehensive and collision. That's what will apply to this rental car. That said, one of the things that's a little bit of a gap at times, and you have credit card companies that actually cover this, like Amex and stuff like that. But if you're in an accident, you wreck their vehicle, and they're not able to use that vehicle for a couple months because it's in the shop, that technically that loss of income for the dealership, loss of use, whatever it may be, that your coverage may not cover that.
Okay.
And look, if you talk to different people, you can fight that because, like, really, you see how many rental cars they have on their lot. They have a lot of
that one car being out is not putting them out.
Exactly. Yeah. So there's ways to fight that, but that would be the only caveat. I always recommend, like, hey, look, if it's cheap, probably purchase it because then you're not going to have to go through your auto insurance and file a claim. Like it's
it's like almost everything in life. Everything from, do I pay someone to give to do an oil change in my car, or do I do it myself? Do I pay someone to mow my grass, or do I do it myself? Right? I should be factoring that in mathematically.
Sure. With your time and
to circle back to what we were talking about. Well, do I pay for gap insurance or do I not? Do I do the 2% hurricane deductible on my home, or do I do the 1%? There's a dollar assigned to that extra coverage, and then you have to weigh whether or not it makes sense to do so. But in a nutshell, to summarize auto, you should as a person who owns a vehicle and has it insured, I should look into gap insurance. I should always make sure I have uninsured motorists.
Absolutely.
And I should call my insurance agent every year or two to make sure that the policy I currently have is still the best policy for me. And if there's a life event, like for me in my household, my son is 15, he'll be 16 in March. That's going to be a life event that's going to require me to reach out and talk to my insurance agent about whether or not the current insurance we have is sufficient for adding that third driver.
Yeah, and I would say even more so, call before that, right? Just in your business. It's like, call me before you go under contract or something, right? So you can maybe coach them up on a tidbit where you actually have time in your favor rather than now you have time against you and you're stuck with the result.
That's fantastic advice. And then on the homeowner side of things, we talked in great detail about really looking at what your deductible is. What does that mean in terms of dollars? I think that's a great takeaway for the audience. How about this? Flood insurance. If I'm not in a flood zone, do you have flood insurance on your home? Irregardless if you're in a flood zone or not, let's just assume you're not. Sure. If you're buying a house today and you're not in a flood zone, does Taylor Young have flood insurance on his homeowner's insurance policy?
So to start by saying, one, I don't carry flood insurance.
Okay.
And I'm not, like, oh yeah, you're an insurance agent, you should carry it. No, like I can make that decision consciously. Just buy your insurance consciously, right? Yeah. But I do recommend for a lot of people to buy flood insurance. If it's because I think it's very cost effective for what you get in a lot of scenarios. Specifically, if you're new in an area and you don't know how it floods, you don't know how it holds water, and you can't afford if something were to happen. Because growing up, by the way, that was the one thing my dad instilled in my brother and I is like, look, you buy insurance when you can't afford it out of pocket, right? Like,
okay.
So that's a good rule of thumb is like if you're not willing or able to deal with the consequences financially, then you should likely look into insuring it. So I think that's a good rule of thumb.
Well, and my understanding of flood insurance in general is one in which, look, if my roof gets blown off and a whole bunch of rainwater gets into my home, that's not a flood.
Different. Flood's going to be rising water from the outside in, right? That's a flood event. Now, at the same time, one of the reasons why I do make the recommendation a lot specifically is, it can be a hurricane event, but it'd be heavy rains and rains and rains, and it'd be a flood that ends up being the cause of damage, right? So it doesn't necessarily mean, so there's a lot of different, if you really want to insulate yourself against water damage, flood is a great tool, specifically here in Florida, because it's Florida.
But really, it's not just Florida. It's the Midwest.
Think about Houston.
And correct. And that's actually one of the bigger concerns in the mortgage industry, outward looking, like looking 10 years down the road, is how many homes we're going to lose in the country due to their inability to be insured because they're in a low-lying area.
Sure.
Like think of the Mississippi Delta, think of the Mississippi River, think about Kansas and Nebraska and the flood issues that they've had, let alone the issues that you have out in California with their natural disasters with fires and mudslides and everything else. So it's actually not insulated to Florida, which is kind of why I wanted to at least touch on the topic. For me, I learned about flood insurance with a hurricane, but it had nothing to do with water coming in because a tree limb came through our window or the roof was blown off. It was a pool that the pool pump that was used to get water out quit working. And when water kept coming in, eventually the pool overflowed. And then the area around the pool started building water. And we were literally like an inch and a half away from that pool water rising before it started coming through our sliding glass doors. And I was at the time told that would be flood. That would not be hurricane. I couldn't be like, oh, it's a hurricane caused it. Like, no, you had water coming up exterior, outside of your home.
Yep, rising water.
Outside
in.
Yes. Yep. Scared the bejesus out of us. We got the pool pump fixed.
And they called your agent.
Called our agent. And it was like really cheap because I'm not in a flood zone. So it was really cheap to add it on. And at the time, my wife had just remodeled the downstairs, like new wood floors, new baseboards, like had it painted. Yes. Like, no, our decision was one in which we didn't want to pay out of pocket to have all of that redone.
Because you just invested X amount of money to get that brand. It's just so funny because I was just going to, because I feel the need to defend myself why I don't have flood insurance now, is because, look, we haven't done that renovation.
Yes.
Right? So my house, my home value, most of it's in the property, right? So, or in the land value, not the property. So for something like that, it's not worth it to me to insure it because I'm not willing, right? Like I didn't have that fresh renovation that I'm concerned about. But if and when that happens, that's a great time to look at your insurance.
Well, yes, I was getting ready to say
right?
literally, if my downstairs looked like my upstairs, there's no way we'd have flood insurance.
Right.
Because the upstairs is all original, contractor grade, needs to be redone, but we're definitely afraid to do so because I have a 12-year-old and 15-year-old,
and they're going to mess it up.
Pretty destructive. So,
Yeah.
hey, we have totally probably run through our time slot. I 100% appreciate, our friendship, B, you coming on the show. If people need to get a hold of you because they have questions as it pertains to insurance, but you and I were only scratching the surface today. What's the best way to get a hold of you to ask more detailed or more granular questions as it pertains to insurance, specifically auto and home? But if they have a business and they need to talk to you about business insurance as well, what's your contact info?
Sure. Yeah. I mean, it's Urban Young, urbanyoung.com, all the socials at Urban Young, Facebook, Instagram, whatever, LinkedIn. You can just DM us, or I'll give you my personal cell phone, 321-297-1337. You're welcome to text me, call me, or whatever it may be, and I'll get you in the right place if I don't have the answer. But, man, I appreciate being on the show and you asking. Fan of yours, close in from afar, and it's been great time spent.
Perfect. And Erb is ERB.
It is.
And then it's the and sign. What do you call that symbol?
It's amperstamp on sunbiz.org, but it is Erb and Young spelled out as far as the brand.
Oh, Erb and Young, ERB and Young, YOUNG. Taylor Young, Urban Young Insurance. Thank you, brother. I appreciate you.
Appreciate you, man.